Hello, everybody. This is Joshua Hayes at BigWaveTrading.com and BigWaveTrading.net coming to you with a stock market wrap-up for May 27th. First off, I wanted to start it off by showing you an iShares Barclays 20-year Treasury bond fund, show you how that's working out for everybody right now. And then I also wanted to show you the TBT, the ProShares Ultra Short 20-year Treasury, which is the opposite way. And as you can see, right now it's very good to be long the ProShares, the TBT, since I kind of was given the signal right here with the move above the 200-day moving average. Very bullish day, engulfed the past price action of the previous weeks. Strong volume above the 200-day moving average. That was the signal that TBT might want to run, and it did. It sure did. 3 days up 8.98%. TLT, 3 days down 4.32%. Working correctly with each other. The New York Stock Exchange today, as you can see that little uptrend line that I drew of the price action from the March, April, and May lows, still holding on to that. You can see the sell-off today came on lower volume. 1.90% after the gain yesterday gives the market an overall 0.59% gain for the past 2 days. So to keep the selling in perspective, it wasn't that bad. Now the 200-day moving average has completely squeezed with this trend line. And now the trend line here can now be added to this. And now you can see price is completely in between the trend line here and the 200-day moving average. It doesn't get any more squeezed than that right there. You can see I drew these extra lines above to show you the potential other areas of resistance that this index will run into as it tries to finish its bottoming process. But I don't know, when I look at our bonds, that sure doesn't make me feel confident whenever I see this. But the market is its own beast, and it doesn't matter our opinions. What matters is the price action. And the price action on the NASDAQ shows once again, to confirm the New York Stock Exchange, that things are pretty much okay. If you want to, you can draw a horizontal trend line right here, connect some of the recent lows kind of right there. And as you can see, as long as this support line holds, the index should be fine. And as you also notice, the support line coincides right now exactly to where the 50-day moving average is. Price is still above the 200-day and 50-day moving average, but now you have support right at the 50-day moving average, which has the 200-day moving average right above it. This should be very strong support, and if the NASDAQ breaks down below the 250 and this trend line, then we could potentially see moves to these lows here before it could find a bottom, or these lows right here, right there in March, or possibly try to go all the way back to the March lows at the bottom. I gotta admit though, my stock charts do not indicate that is to happen. However, you can use these areas as support levels on the NASDAQ to watch to make sure it holds. So the NASDAQ has a lot of support that it can find along the way, including even support right here. So we can even draw another line right there. So as you can see, there's a lot of support areas for the NASDAQ. Relative strength line recently has been very strong compared to price action, but still it isn't hitting new highs yet, but that's okay. It's good to see the S&P 500, Dow Jones, and NASDAQ all move bullishly, just changing time periods. There's S&P 500. Once again, let me draw this trend line of price action, and you can see that it's similar to the New York Stock Exchange. It too has price coiling and tightening in between the 200-day moving average and this upward sloping trend line and the 50-day moving average. Price should not break down, but once again, using the same levels that we just did on the NASDAQ, you can find support level here, and support can also be found here if the stock would happen to go ahead and break lower. But there's just a lot of support, as you can see underneath, and even support right here we can even throw out there. So just a lot of levels of support area ahead for the S&P 500 if it wants to pull back. And I would really, really doubt it if it goes below 800, honestly, with just the way the uptrend is. The only thing that kind of worries me a little bit, but actually it's good because you see the S&P 500 is in a consolidation area. You can draw a trend line here, draw it here, and you can see it's kind of in between those two. Well, there's too many lines on this chart. Let me get rid of all those. And then draw this one right here. You can see it's trying to make a slight pennant formation. See if it can break out of it, break out higher or lower. So like I said, you can draw trend lines all day. During this consolidation, volume has gone lower. That is supposed to be bullish. This indicates that we should see an upside breakout. And with the way that people are, I've been hearing some crazy people talk about how this market's never ever going to come back. And it's not that they're crazy, it's just that they act crazy whenever they say it. So it makes me think that if these people are that bearish, there's no way they're long. And then whenever you have stocks like KERX, I know it's a speculative stock, but in 3 days it's up 108%, and I'm not going to look that in the mouse. Also, let's see if I remember this ticker symbol, GNTCB. Nope, that isn't it. But there was a stock in IntelliChart like up 800% today. I doubt it really was, but still, the point is, look at Harl, 17%. There's just stocks that are moving. And even if you have to go to the sub $1 area, the sub $5 areas, so be it. That's what you got to do. 65% gain in 1 day in Kirk's. No, nobody. Money is money. Nobody's going to be like, how did you get that 65% gain? Oh, you didn't get it the right way. Well, if you bought the Kirk's at the pivot point, you got your 60% gain the right way because you bought the breakout. And the breakout, if you don't know what the pivot point is, it's either here at this high day area, or you could just draw it across the recent opens areas, and you can see that it perfectly broke out of both. And you could have added past the first breakout and added past the second breakout. However, I didn't watch the stock intraday, so I don't know how it traded. So that's all up to you. Looking on to the rest of the indexes, now we know the New York Stock Exchange is fine. NASDAQ is fine. Consolidating on lower volume. Should be breaking out on higher volume. Dow Jones Industrial Average. Let's take a look at that just to make sure it's good, same shape. Yep, pulling back in lower volume. You can see as it goes sideways here. Here and here. In between this little area, look at the volume. Well below average, so that's very good to see. So I'd like to see. That means if volume comes back on the upside, we get a breakout to the upside, that bullish uptrend has a lot higher chance of becoming successful than a lot of the previous ones. And also, what else is going to increase the chance for success is that soon price is going to be above the 200-day moving average. Soon, the 50-day moving average is going to be catching up to the 200-day moving average. And like I said, there's a simple way to trade stocks if you want to do it a certain way. Look at a daily chart of the NASDAQ. Go all the way back out, and let's say that if you bought it with the move with the 50 above the 200-day moving average with price, you would have been long this move, for instance, from here to here. You would have been long the 03 to 04 move, and you would have avoided the downtrend, obviously. And then the same thing in 2007. Price breaks below the 5,200. The 50 rolls over the 200-day moving average in 2008. The price can never stay above the 200-day moving average. The 50-day moving average can never get back above the 200-day moving average. And here it is coming to its closest point that it's been in a long time. I'm going to get rid of a lot of those lines so I can see it more clear. But when the white line's above the purple line on this chart, it's bullish for stocks with the price above it. When price is below the 250-day line, very bearish for stocks. And you can see that cross happened in early 2008. After prices went below in late 2007 to early 2008, prices never got above the 200-day moving average. The 50-day moving average never got above the 200-day moving average, so there's never a reason to go long. And if you held that position, you still aren't long. You're just now starting to want to get ready to go long, as the 50 is now coming right close to the 200-day moving average. Now, with the indexes that we know that are in overall pretty bullish setups, let's look at the commodities market. Platinum holding in, overall bullish uptrend. Show you the uptrend that I'm looking at. Draw this line, the D, press the letter D on IntelliChart. Connects the lows in early 2009, almost connects them in March, touches the late April lows, touches the May lows. Bottom line, you have 3 touches, and that's what you need for a trend line. And the same way, we can draw this line here too and say that this stock, 1, 2, 3, well, almost 3, is in a very, very tight pennant formation, as you can see here. Probably best shown on a arithmetic. Let me go and throw up an arithmetic. There we go. That does show up better because I don't have the 50-day moving average as a white line. You can see this long pennant formation is starting to come to its apex. Will it break to the upside or downside on the apex? I'm voting for upside, since I'm voting for hyperinflation in the future, which should destroy our purchasing power around the world. It already has, actually. Well, not the hyperinflation aspect, but our piss-poor government aspect. The silver position, you can connect these kilos right here. Connect the November, December, almost the March, the April, May lows. Very nice high. You can see that this was a breakout point, pivot point. You can see it's right there at the old February highs. One more tick higher for silver, and it will be breaking out to a new high. So keep an eye on that. This is basically an ascending base from a low, so it's not a real one, but it is ascending, and it is something that we're going to need to watch for a big move. And gold, of course, what you see here is the reverse head and shoulder pattern that should lead to a breakout above this high, and gold should attack new highs. All right, I'm going to wrap it up here. I'll be back with part 2 later on. I got to go make a Costco run. Aloha.